Well, let's come back to the studio and go back to our, business on gold for reserves program. Well, let me start with you, Doc, again. The IMF is raising issues about the risks that this whole program poses to the Bank of Ghana. They've said that there is a loss of 214 million as of September on this domestic gold for reserve program. And so they are warning the Bank of Ghana to be worried. Other people have argued that, well, that has brought some stability to the currency. So how do we balance it so that we are gaining, but won't also be at risk? Or like others have said, well, in this business, there's always a time when you would get some debt as well, but you look at the positive side of it. Where do you stand?
Well, thank you. I think this is an issue that the Bank of Ghana itself has issued a statement on it, and the Gold Board themselves have also issued a statement on it. But that notwithstanding, if you look at it, let's look at the total effect or the net effect of the loss. Is the net effect of the loss positive or negative? To the Bank of Ghana, it may look negative because, it stems from certain angles. One, it has to do with the assay cost, which is about 0.5% that they pay to Gold Board. Then also, the cost of processing. Off-taker cost, that is about 0.5%, and the other one is 0.25%. And that brings out about, I think, Gold Board has received about 800 and something million Ghana cedis from Bank of Ghana as a result of the program. If you look at it, Bank of Ghana may report that as a negative figure, right? But Gold Board is reporting that as a positive figure.
Yes. And that reporting that they have made some 600 million.
600 million profit. So that positive figure is having a positive impact on the life of the economy. Let me put it that way. Okay. And now let's look at the balancing aspect of it. Now, if you look at it, Gold Board has been able to sell has been able to mobilize about
10 billion.
About 100 tons of gold for Bank of Ghana. And that can translate to close to about $12-something billion, which means that our reserve is going to be increased. And it is noted that our reserve is itching towards about $13-something billion at the end of the year, which means that we are having a solid economic base to be able to stand on. And if you notice, there's been a significant appreciation of the cedi in the last few months. And this can be juxtaposed to the fact that we have been able to significantly meet even the ECOWAS convention criteria, the primary criteria that at least we should have an appreciation of the cedi less or plus or minus 10% of appreciation. And if this policy alone has been able to support this, that is something good for us. Now, let me be quick to say that the loss is not only on the payment that they make to Bank of Ghana, but there has also been another aspect where the Bank of Ghana the Gold Board buy the gold at a premium, and the gold is sold at a discount. Now, it means that there is a discounted loss of about 3 to 5% of the total cost. But that notwithstanding, is the people who are buying the gold in Ghana, we charge some taxes on it. Let's say if it is a VAT, which is like close to about 21%. Okay. So if you net the 21%, the 5% out of the 21%, you will see that government is still having a significant benefit or a significant gain as a result of that. Okay. So what that means is that even though Bank of Ghana is recording a loss, but there is a significant benefit when it comes to the fiscal side or revenue mobilization aspect of the whole thing. And when it also comes to the stability of the banks in terms of the exchange rate, in terms of inflation, because inflation has significantly fallen to about 6-something%. When we were projecting that, we're going to be having about closing the year with about, I think, double-digit inflation. But now we are closing the year with a single-digit inflation. And there is a possibility that inflation is likely to further come down. And some of these things are happening because we are having a very good stance when it comes to that aspect
gold
of the
for reserves.
gold for reserves. Now, if you look at even the fiscal aspect again, even though expenditure is being constrained in a sense that we want to balance and be able to be within that balancing act where we can have a primary surplus of 1.5%, which the government has been significantly achieving. And even further, that is also happening. So on a whole, you look at it, you realize that there is a benefit coming out of it, right? But, I mean, we are not saying that Bank of Ghana cannot put in measures to ensure that they push that thing to go board. Okay. And if you notice that this is an agreement that was signed between the Bank of Ghana and the former PMMC, what do you call it?
Precious Minerals
Marketing Company. And that was done somewhere 2023, thereabout. And I hear the Bank of Ghana has signed another agreement to transfer that to Go Board, right? So if that is done, you realize that in 2024, 2026, the Bank of Ghana will be off that kind of losses.
So the risk will go to...
The risk will be transferred to Go Board.
Okay. All right. Once we've had that, Prof, let's look at our reliance on gold over the years. How has that helped the economy, even in job creation, for example? Because you know how we've always, in time past, said that unemployment is a national security threat. So how is our reliance on gold per se helping this in us trying to solve these challenges that confront this country?
Yeah, I think you look at gold operations. Ghana, I think there's a strategy, a recent microeconomic strategy we are using to have micro stabilization. The tool that this administration is using is this gold-centric strategy. And that is relying so much on gold as a tool to stabilize our currency. Dependence on gold does what? It brings you foreign exchange inflows. It also helps increase your gold reserves. It helps cedi stabilization. And then it also helps the current balance accumulation. It helps. So these are the positive times. Could it be seen as a shock absorber or hidden vulnerability? And that's why we are having this conversation. Gold production itself is capital intensive. And to have it as a strategy of solving our unemployment problem in the country would take time. So if that is used as a strategy, it takes time. I've given you the benefits of this goal-centric and using that as a strategy to help reduce our unemployment rate. It takes time. Now, having answered your question, I followed your news portal, My Joy Online. That was on Wednesday when that news broke out that the losses Bank of Ghana incurring as a result of the Gold Board issue. Immediately after that...
It wasn't Gold Board per se. It was the Gold Reserve program.
Yeah.
But, I mean, Gold Board is related because they buy the gold for
Bank of Ghana.
Yeah, the program was initiated some 2021.
Yeah. By the previous government. Yes.
And a component of that is the gold for reserves.
Yeah.
Good. So immediately after that news, by your reporter, as a result of the IMF program reports, then we had the CEO of Gold Board, who also on the same portal, around, I'm sure, 6 a.m. in the morning, had also issued a statement, a counter statement, that not true. Then we also had another statement from BOG saying that they are going to exit the gold trading business. Describe IMS losses as premature. This is your heading on the My Joy portal. To be honest with you, Brace, let's let your viewers know. BOG report will be finalized for 2025. I think next year, then we'll see the real losses if we even have something like that. We have not seen the entire end of year report. So let's give credit to. We have also not seen the report of Gold Board.
Gold Board.
Yet. It will be somewhere 2026.
But they have a lot of reports on their website.
Yeah.
Even according to some agencies, they are unedited.
But I, as a finance person, will rely on the audited,
okay,
which will give a broader idea for us to consume. So I'm waiting to see the two reports and then be able to identify the losses IMF flagged. But they flag the losses not in terms of the profit issue we are talking about here. These losses will not sit in Bank of Ghana books. Will not sit in Gold Board, but rather will be Bank of Ghana books at the end of the year. They flag it not in terms of the profit we are looking at. It is about fiscal transparency. That's all. Transparency. We have issued statements, RTI, to Gold Board somewhere months ago to know the transaction dynamics of Gold Board. We're never given. We're now directed to go to BOG for the report. We've been there several times. We've not seen any report. They've not written back to us. Now, I was worried when the personnel from BOG on your news portal made or responded to what was in the media. I was shocked because whoever did that should buy it. He himself, but in shame. One, BOG, we are not aware of the figures of the report before its publication by BOG, because at the level meeting, when they finish, we all sit down and look at the report. We are not aware or preview to the content of the report before it found its space in the public. If there were inconsistencies, if there were figures were not accurate, they should have challenged this at the meeting. But they allowed the report to get into public domain for consumption. And now we are consuming. And we are being told that's not the issue. But I asked several questions here. How much money did the Bank of Ghana inject into the purchase of Gold Board to buy gold? How much? I asked another question. After selling the gold, how are they going to deduct the money that BOG gave them? So we know. If you check from the the budget of 2025, you go to Appendix C of the same report. In 2025, they budgeted 412 billion, 70 or so. Release nothing.
But Gold Board says, and that the report even states it, that they charge, I think, 0.5% as the agent fee or so on the purchases, and 0.125 as saying fee.
I say it's 0.25.
I am looking at
0.25, I think. Yeah.
And the off-taker fee.
So that is that is the money that comes to.
No, I'm looking at the setup of Gold Board.
Okay.
The model that they're operating. When they set up the Gold Board, the strategy was that they were going to give them 271.
Yes.
For them
in this budget, 2025.
And nothing was released. So budget promises 404.5 billion, releases nothing. Then revolving fund of 270 losses. To be given to Gold Board, no release, stored. Yet we are recording a loss of $214 million.
Okay,
See,
so I have the details I shared earlier. Let me get it well. It says the only fees Gold Board takes from BOG is a statutory assay fee of 0.25% and a service charge of 0.5%. These fees are not new. So that's what I think that's the revenue Gold Board generates from these gold purchases. BOG.
You are super. But I'm looking at the model of Gold Board.
Gold Board, okay.
You promise giving Gold Board a revolving fund of 201 or so million. Stored. You promise in the budget 4.5 billion. Releases nothing. There's something in finance that's called quasi-fiscal operations. When budget spending vanishes from the budget, but then appears as central bank loss, or when spending approval bypasses Parliament and hit taxpayers. That's all quasi-fiscal operations. That's what we are saying.
You're saying that they've spent money that didn't go through Parliament or something has missed.
Who approved that money?
Which one?
The money they're using to trade.
Okay. But does does someone approve spending by the central bank?
No.
By the central.
It's not the board of the central bank.
You set up a fund, and you say you release an amount for its operations.
Yes, that hasn't gone. We have all agreed.
So how would this institution operate? And that is why central bank now gives.
No, but I think there was already an agreement between Central Bank and the PMC. So
you've cited
that operation.
No, I haven't cited
that operation was already in place, working. So Gold Board is just continuing that until that is discontinued by the Bank of Ghana. That is when Gold Board can now come and say that we are now fully operational. But until then, Gold Board is just rendering a service to the Bank of Ghana, and the Bank of Ghana has to pay for the service.
So
you have to get it from that angle.
They are rendering a service.
Yes, we understand that they budgeted an amount of money to be released, but that amount of money was not released to them. That is a point. Maybe the operations because Gold Board was not taken over from that aspect of the Bank of Ghana, and Bank of Ghana was providing the funding to be able to do that. That was why the money was not released to them. Okay. So let's say the government can still offset the loss in BOG, but that set amount of money. No. So once you operate, you see, there's something called, once you operate, what do you call it, a budget surplus in an aspect, that budget surplus can offset any losses Bank of Ghana is likely to have. So you have to notice.
There's nothing wrong for Bank of Ghana to make a loss. I've been on platform, I've said it several times. The core mandate of BOG is to do inflation, amongst other things, is to do inflation targeting. Ensure steady stability. All right? Among other functions. So it's not be out of place if a Bank of Ghana operates and now record a losses. And there's nothing wrong. It's happened before, the previous administration. My challenge here is that you set up a board, say that they should do a project. You fail to release funds. Those funds should have gone through the budget approval process. But you fail to release support to this fund. And now, you central bank, how is central bank funding this whole transaction? Per what I have gathered, it means that they solicit funding and funds from these banks and now give it to Gold Board to purchase gold and now bring the inflows to central bank. And that is why they are buying at premium. And we are sitting here. It's about fiscal transparency.
No, but
you see,
I think
allow him to have his time. I'll come back to you.
1 minute. I will give you the floor if I finish. You know, when it happened this way, why would Central IMF flag this? It's about purchase cost. It's about transaction fees. And the fact that those three costs are more than the proceed that we receive. So you buy at premium. The Bank of Ghana ordinarily won't be able to sell at premium. They'll do as discount. That is why this is happening. So the point is that when you set up a fund to pursue an agenda, what prevented this administration releasing funds for them to do their core mandate operations? And that's why we're sitting there talking about this.
Okay. All right. Yeah, Doc, you wanted to make a point, but then I'll come back to the whole discussion about gold and how it's helping the economy. How have we performed in the year under review for gold? So probably start from me whilst you address the issues.
Okay, so the point is that if you look at the operations by Bank of Ghana uses two main sources. One, it uses the high-powered money, which is monetary base, and that of the reserve requirement that they take from the commercial banks. So instead of the reserve requirement sitting at Bank of Ghana, let's use it to be able to shore up our reserves. That is even the essence of the reserve requirement. Even though the banks are supposed to be keeping the reserve requirement, in a sense that's what they call it, regulatory in nature. So funds that are supposed to be invested, and the Bank of Ghana find another way of investing it by using the money to purchase gold in the system, help to shore up the city. What is wrong with that? And in addition to that, the Bank of Ghana also mobilizes the city equivalent from the commercial banks, uses that to buy the gold, and in turn supply them with dollars. Because when they need dollars, they have to come to the central bank. And if the central bank do not have a dollar program in place, what happens? That is how come that I give good credence to the former administration for setting up the system of gold reserves and all of that, even though it was already there. The gold for oil also came and all of that. There has been some losses in even the gold for oil as well. So let's see how we can position things and ensure that things work in a very efficient manner. Now, to your question of what do you call it, how that is helping to support job creation, right?
Yes, exactly. I mean, how has gold itself, our reliance on gold, helped? How has it helped the economy, job creation, and all of that?
Well, specifically, if you look at it from that point of artisanal collectives, like your ability to gather them and buy from them alone is a form of transmission. So, for instance, I'm looking at it this way. The Bank of Ghana buys it directly from them. The money goes to them. The money is retained within the economy. So you don't end up, the money don't end up going to rely somewhere. You mobilize the money within your economic space, use it to buy it within the economy. And the economy replenishes the money and creates the employment as a result of that. Because there is a backward and a forward leakages when it comes to the mobilization of the funds. Yeah, because if you should allow the artisanal gold miners to sell the gold by themselves in the first place, you realize that that aspect will just go to maybe some foreigners who come, buy the thing, take it and go away, and all of that. So that system is not properly created. And if you look at Gold Board, for instance, I think they have also come out with things like the way the Cocoa Board operates, where they give licenses to people who want to buy gold and come and do that, and people want to do the mobilization and all of that. So people will begin to create companies around that particular arena, that particular cycle. So when they create the company, they give employment to a whole lot of people. Administrative workers are there, cleaners are there, etc. So there is that kind of...
But this used to be there already. It used to be the system. I mean, we knew of gold buyers. They used to operate this before Gold Board.
They do, but that was not properly formalized. Right now, you have to take licenses, right? And if you take licenses is supposed to create, they're supposed to use that to have a proper structure. And that proper structure should be able to create that kind of...
But I don't even want us to just focus on Gold Board. Let's look at gold
now,
in general.
In general, so
Look, Ghana has relied on gold for a long time.
For a very long time,
yes.
It's true.
So how has that really helped our economy, job creation and all of that?
And if you look at the economic aspect of it, I mean, the economy in the past, okay, has at least been progressing a little bit, right? But gold as a whole, it has a very, serious impact in trying to spread the income that is generated. So when you generate more income, you are able to use the income to invest in other sectors of the economy. So let's say if you're able to invest into other aspects like manufacturing, you're able to invest into agricultural sector, etc., then you should have the economy improving and more people also getting employment as a result of that. Yeah, so
that's how you
that's how I see it to be.
Please, back to the issue, before we see the importance of gold in general to our economy and as a way of reducing unemployment. The transactions by BOG, if there will be another appraiser by IMF team, this is a fifth one, and we have not yet finished in terms of receiving the support from IMF. If they record a loss in this year, and they tell BOG to transfer the losses to Gold Board, what happened to the balance sheet and the financial statement of Gold Board? That's another thing we need to consider. They have flagged an issue based on operational and pricing problems. If they direct BOG, transfer these losses, if you are making losses because of this transaction or agreement you have with Gold Board, transfer from your books to Gold Board. Gold Board will not make profit anymore that they're boasting about. They will not. There will be another appraiser again by IMF. And let's see what happens. So the point is that it is not about what is happening. It is about transparency in this whole transaction. Why you set up a fund? Why would you allow the fund to operate on its own? Why don't you release the funds to these people?
That will go, but as they said, they are executing that.
That is my worry.
BOG and
why would BOG not focus on their core mandate?
But
get involved in.
But we all agreed that we needed to stock up our gold reserves.
But why would you use intermediaries? If you want to stock, we have increased our reserve over years with that involvement of Gold Board over the years.
We did through
I'm saying that
PMMC.
Check the quantum of gold that came from there. Check. You get the figures. Now back to your issue. You know, over the years, we have seen the importance of gold. In fact, all the export we've had so far, cocoa, gold, timber, and non-traditional, if you add them, it is gold that driving all our exports.
It's
cocoa,
gold, right?
I mean, it's still, if you check the quantum or the percentage of how much we get, gold, I mean, is the one that's leading per the numbers that I've seen. So a country depends so much on gold. What we get, in essence, is just that it helps boost your foreign exchange inflows. It also helps, as I discussed, it stabilizes your cedi because you use it as a benchmark. And then also helps your current accumulation and settle. But let's flip the discussion, the coin. If you want to use gold, what it does is just a short-term relief because of the capital-intensive nature of gold as a tool to help reduce your unemployment issue. It's a problem. So when a country relies so much on this without, looking at elsewhere of solving the rare issue we have, you still go and come back. If we all decide at the end of, the whole year or years ahead of us, we are going to rely only on gold. It's good, but it's price dependent. And it's volatile. It's price dependent. If we sell gold to the international market and the price of gold drops, what happens to us? Which revenue are you going to get? I'm not saying if we use gold as a means of reducing it, it's bad. No, we have been using this. But it's time for us to look at other ways of solving our unemployment problem. It's volatile.
Okay, all right. Now, let's still on the economy. The education minister says the Ghana's economy went into an abyss in 2022, and it goes beyond COVID-19. And he says it will take some time to redress the structural imbalance and some of the problems listed on the Ghanaian economy. Look, we thought that with what we are seeing now, the stabilization of the cedi, inflation coming to a single digit and all of that. Aren't we there yet? Do we still say we'll need more time to deal with the imbalances, the structural imbalances of the economy?
Well, if all the figures that we have are on track, then we should be anticipating that the economy should rebound. Earlier on, if you look at I think the challenges started in 2020 when we recorded a growth rate of 0.4% or so. And by then, the global economy recorded a recession of negative 2.5%.
So we did well.
Of GDP. So Ghana actually have stability. But the challenge was that we did a lot of other excessive spending because of the elections. So political business cycle effect that came into force.
It wasn't because of the COVID?
The COVID might have played a role because significantly production was actually down. Okay. People were not going to work. They have to be paid, a whole lot of things. Lockdown, people have to be laid off, etc. So production was actually down. But post-COVID, what happens? We had a lot of challenges when it comes to our finances. We were not able to even go into the international capital market. We were downgraded, etc. So we relied solely on Bank of Ghana financing. And to a tune of about 48 billion Ghana cedi was financed by the Bank of Ghana. So if you look at the losses that the Bank of Ghana made as a result of the debt exchange program, you will notice that chunk amount of the money was coming from marketable securities. And that marketable securities, if you trace it back, you realize that the Bank of Ghana did not finance that through their balance sheets. They were financing that through printing, etc. And that resulted in the inflation that we had in 2022, to the tune of about 54% of 54.1% that the inflation went up to. Then the cedi also significantly depreciated by close to about 54%. So on a whole, if you look at all of these things, it has a very serious impact on the economy then. Then I think the inflation started coming down, the currency started wobbling, and it remained somewhere, I think 14, 15 thereabout Ghana cedis until the current administration took over. And they took over somewhere, I think January this year. And by the close of 2024, we had an inflation of about 23.8%. We had a exchange rate depreciation about some percentage point. The monetary policy was like 28 point something percent. And now monetary policy rate is down. That is about 18% or so, which means that we have had about 1,000 basis point reduction in terms of monetary policy rate. Has it started reflecting in the credit rate? So it has to... I mean, in the interest rate that people borrow. It has to reflect because interest rates are coming down. Banks are now lending about 17%. So it has started reflecting? It has started reflecting because, you know, it has to be fused into the Ghana referencing rate. And the Ghana referencing rate is a composition of about three things plus, I mean, the vote, the monetary policy rate, the treasury bill rate, and the interbank rate. And you note that the treasury bill rate is coming down. It's about 10 point something percent. Okay. Then interbank rate is also hovering around 19% or so. So if you put that into the formula and you look at the vote, the amount of money in vote, you realize that significantly the Ghana referencing rate is going to come down. And if the referencing rate is down, the premium that banks are going to charge are also going to be what? Less. Of course, it depends on the bank's ability to, depending on the industry that you are borrowing from. Because if the industry is not it's not all that good and non-performing rates are very high, you realize that it's going to be affecting that particular bank's premium that they are going to charge.
So from where we are, how many years do you think it will take us to really deal with the structural imbalances of the economy?
Well, we need a lot of reforms in the system. And if you look at the reforms, you realize that we need to be able to mobilize more revenue. Okay. So if you're able to mobilize more revenue, it means that we are going to be reducing our deficit. And once you reduce your deficit, you are not going to be borrowing more from externally. Okay. But I think the government is putting in a lot of measures. So I think there is something in the budget they call value for money. And that value for money committee that they want to set up should be able to do some magic, let me put it that way, And I think the port also, they are putting in AI system in place to be able to resolve some challenges. And last year, they said about 205 billion Ghana cedis, and they can only get taxes from 85 billion, which means that a significant amount of the money taxes are not collected on it. So some of these loopholes, if they're able to close them, we can get the economy back to track.
Okay. All right, Prof. How do we deal with the imbalances, the structural imbalances?
I'm always in love with your insightful questions and all that. Very, very spot on. How do we deal with it? After all these conversations, how do we? Let's give credit where whoever is due. This administration, we have seen an aspect. Two things that I've seen: targeting inflation and exchange rate reduction. That's two major things I've seen. But all these have come at a cost. The capital injection. When those things are sterilized, those dollars we inject are sterilized, we talk about the cost in mopping up. So years to come, we are going to see the cost. But then, I have not seen any reforms that are more of a paradigm shift to resolve the issue you raised. How do we change the structural reform? The status quo. It's been like this over years. I'm not blaming this administration alone, several administrations. But then, this administration giving us hope whilst in opposition that they will, when they are voted for, will have the magic wing to change the structural reforms of this administration. I am concerned about the pathways in targeting exchange rate and inflation. It's about the injection. Now, in the same IMF report, IMF proposing an extension of this credit facility.
By
somewhere August.
3 months.
So what does it tell you? When the economy is doing so well, as we claim, what do we need extension for?
But that's a proposal. The
It's a proposal.
Has not agreed.
But look, trust me, I hope we don't tie our clothes, to IMF. It's my prayer that we will not go to IMF. We'll be on our own. Let's wait. I'm praying that this thing will not happen. It's a proposal. Yes, it's fine. But let's hope it doesn't. Because I'm judging by some of these comments. IMF proposes, the one giving you funds, you're going to come out next year. Now, before next year, tells you, making an offer, will the government accept it or not? If this economy is doing so well, as we have been told, then we should not go into it. We shouldn't. Why do you go to IMF? We heard some years ago.
Are you saying that the IMF proposing that they extend this facility or this program means that there's something we are not being told? Is that your argument? Because I'm not getting it well.
Well, I don't. It's just as you say. It's a proposal.
Okay.
But it's my prayer that we will not accept this offer. It's an offer. Why do you go to IMF? We go to IMF for so many reasons. They are there. They take their money, and you come for the facility.
Okay.
And then you pay. So if they make a proposal and you are self-sufficient, you are okay. You've done all your implementations. The 24-hour economy, the Jumera, all this is in place. Trust me, these reforms we are talking about, I am yet to see a major reforms. We are looking at revenue shortage. And that was one of the things IMF raised, apart from meeting the performance criteria, apart from meeting the initiative, target, and all that. Revenue shortage. In the same budget, we have given space, given tax-free, SMEs, use their tax components. In the next year, other agreement we are going to the bilateral, multilateral institutions will start coming up. Where your reforms, your flagship program, are in the bedroom, in dress.
We can now go to.
How do we do that?
We can go to the market.
To borrow from where? Is like who going to the international market?
All right.
So it's a bit hazy.
Okay.
It's a bit
all right.
hazy.
Okay. Thank you very much, two gentlemen, two finance persons, for gracing our show this morning. Professor Isaac Body is Dean Accounting and Finance, UPSA. Dr. Mohammed Jabir is a lecturer at the University of Ghana Business School.